What's going on, guys? It's Ryan with Stock Trading Live. Today I'm doing a portfolio update and talking about my past week, so my weekly update as well as my strategy going into next week. I'm going to be doing a double upload today. This video I'll be focusing on my strategy and how my plays went for the week. And my next video I'll be doing a portfolio update for my stash portfolio. So I'll be pretty much showing you guys the majority of my investment portfolios. So first we're going to start with Robinhood. So last week I uploaded my portfolio. This week I have many of the same holdings, but I did have a few of my options either expire, and I had a couple that got assigned. So I was selling a covered call on a number of stocks, which I have here in my history. And most of them, if not almost all of them, expired worthless. However, my Pfizer call did get assigned. So looking here, we have the Pfizer call assignment at 33.5. So I got my 33.50 back in cash. The rest of the contracts this week all expired worthless. So I was able to take in some nice premium and keep the majority of it. The only call that got assigned was on Pfizer. So right now what I'm doing is I'm holding some cash positions. I'm deleveraging my portfolio. I'm condensing my positions because right now I'm playing it safe. The market has been pretty volatile and we've been kind of shooting straight up. So if we do have some kind of second wave or any of these other things that these people are talking about, I'd rather be safe than sorry. So I've been limiting the positions, raising cash, and deleveraging. Currently, I'm still selling quite a bit of covered calls every single week and still collecting dividends on some of these positions. So right now, we're selling covered calls on AT&T, Cedar Fair, MJ, Realty Income, Kinder Morgan. I also have 400 shares of General Electric, so I'm selling 4 covered calls every single week on General Electric, pretty much getting about 1 free share per week in call premium. We're also selling calls on Coca-Cola, and then I have a couple of hedges. I have SQQQ, which is a short NASDAQ ETN. We have SH, which is a short S&P 500 ETF. This one is not leveraged. This is a safe hedge that's not leveraged. And then we also have TVIX, which is also ETN, similar to UVXY and SQQQ somewhat. So I'm also selling covered calls on Altria. And then I have a few kind of random shares of Intel, Nikola, and UVXY, which is another hedge. So my portfolio is actually quite hedged right now. I have UVXY, I have a little bit of TVIX, and then I also have some shares of SQQQ. So it does look like it's pretty heavily leveraged right now, but this is actually hedging for pretty much my entire portfolio across a number of platforms. So while it might look like a heavier percentage of my Robinhood account, in regards to my overall investment portfolio across my other accounts, it's actually a smaller position. So then my current positions, I had about 8 contracts expire worthless on Friday, as I showed you guys at the beginning of the video. So I only have a few calls and options open right now. So far, I have a call sold on General Electric, $7 strike price. I have 2 calls sold on SQQQ with a $9.50 strike price. I have a $35 call sold on Cedar Fair. I have a $62.50 call on Realty Income, which I actually just locked in my dividend, so I'm getting about a $23 dividend every single month from owning my 100 shares. And then lastly, I have purchased 2 calls on UUP. I purchased a debit spread on T-Mobile puts. And then lastly, I actually sold a put on CVM, which is a biopharm. It's a pretty volatile biopharm stock. The current share price, I think, is about $14. So I sold the $10 strike price, which is, about 40% or so out of the money. I took in a $100 credit. So essentially, if my put got assigned, My average cost basis would be $9 per share. It expires on the 17th, which is about 2 weeks away. So the way I see it is, first of all, the stock would have to crash down to below $9 per share by the 17th in order for me to take any kind of loss. And if it stays, above $10, if it doesn't really make many moves, I'll get a free $100. So I kind of made that position, and hopefully that will pay off. But that is the Robinhood portfolio. We averaged about a 2% return during our past trading week, which is about $400. So that's the Robinhood portfolio. As I mentioned in the beginning, my current focus is more about preserving and staying safe and taking risk off of the table than it is being aggressive and going into some of these stocks that are making new highs. We have the NASDAQ and technology stocks making new all-time highs, and they keep going higher and higher. So I'm kind of just taking risk off of the table, playing it safe, and we'll see how that pays out. So thanks for watching the video, guys. If you haven't already subscribed to my channel, and you like investing in the stock market, trading, learning about options, we talk about all that in my channel and more. So don't forget to smash that like button, subscribe to the channel, and we'll talk to you guys soon.